Going over the hypothetical trading system signals for Thursday, July the 6th, 2023. We have had a holiday week, and July the 3rd was a don't trade on holiday day that I sent out afterwards. We were not scheduled to trade on July the 3rd. That was Monday. The 4th was a holiday. And so the data from, if you're looking at .d data, the data on the 4th is there on this one. And the data on, I guess the 3rd is there on this one. And what you'll see when you refresh it, I've refreshed it on my automation, is that the data on the 4th should go away, while half a day's data will still be there on the 3rd. And so it's tricky when there's holidays. The 5th and 6th, I'm going to go over the hypothetical results for those today, Wednesday and Thursday. Unusual to have the first 2 days of the week kind of a holiday. This was half day. The stock market was open half day on Monday. That's why we have half a day of data on the 3rd for the .d symbols. Not the if you don't have the .d symbols, it'll be all the data will be there. On the 4th, you'll see the data, but if you refresh this .d data, the data on the 4th will go away because the stock market was closed on the 4th. And so the way you can, I'll show you how to refresh it here. So the way you refresh it in TradeStation 10. By the way, the TradeStation 10 platform is working really well with Build 69, and a lot of crashes with Build 68. Unusual to have so many crashes. TradeStation's updated to Build 69. Haven't had to reboot this computer in a few days, so it's working great. And you want to refresh this data though to get rid of the data on the 4th. You go Data, Reload Data, and then select that. And so you see the data on the 5th and the data on the 3rd is there, but the data on the 4th is gone. And you say, well, why do you want to do that? Because eventually that data will disappear anyway, and any additional data, it's one of those things that can cause trading system signals to change if the data changes. And when you're working with .d data, and holidays, they change things up a little bit because you have a day like this that closes early, and then so your last closing price is based on 13.15. And maybe the spirit of your strategy wants to look at the last close of the last full trading day instead of yesterday's close, which is a holiday, half day. And so it makes things a little tricky. And so that is what we're looking at. So we haven't traded yet because we stopped on June the 20th, and we wanted to redo our portfolio. We went from stock index 32 to stock index 34. And we removed 5 strategies and added 7 more. And so we are on that. And we're waiting for it to go into a drawdown because it ended. We had this new portfolio set up, and it ended the month and quarter of June at an equity peak. And so waiting for it to come down because this stuff is very cyclical. And it's in about a minus 6.8K out of about a 25K drawdown. So I want to get into that. I want to get in on a 10 to 12K drawdown to start, to really help us manage our risk and any additional worst case drawdowns, because this market continues to change on us. And so we continue to sync up with our best strategies, but as markets change, we have to manage our risk and rotate out of strategies that don't work. And so we want to get in on a drawdown. So that could happen intraday. If we get, tomorrow is Jobs Friday, and if we, that happens an hour before the open. And so if we get, a 3.2K drawdown really quick, or 5K drawdown really quick, we may phase in intraday. We may turn automation on, and sync up with the current positions, and then turn automation on. And so yesterday and today were down days, and tomorrow is a Friday. And so let's look at this market. This is the NASDAQ. We trade a lot of NASDAQ strategies. We trade 17 NASDAQ strategies, 17 S&P strategies. And once again, I'm going to show you the hypothetical signals for today after we go over the market. And we're not trading live, so I don't have live results. When we trade live, we have live results. And so market gap down. Most of the short side was overnight. And then it looked like it might roll over here. But it turns around and floated higher instead. And from about noon on, somewhere in here, the range on the day was only 60 points. 60 points on the NASDAQ. And so Very kind of contentious down here, fought back, and then just kind of went flat right above the opening price. Sold off, went flat above the opening price, and so just a mean reversion in a pretty narrow range on a down day. This market's due for a day that punishes the bulls. The bulls have not had a bad day in a long time. A day like today, you say, well, it's down, yeah, 0.82%. But even in strong bull markets, there's down days that make the bulls doubt their position or wonder if this is it. And so they've had it pretty easy. These down days, they get captured and brought right back up. And so bulls adding to position get you to have some profits if they buy that dip off the low. So it's been a real easy time for the bulls during this time period. And so the cycle for some harsh downside, just as this is a matter of normal market cycles, is there. Doesn't mean we'll get it anytime soon, but we trade both sides, long and short. These are day trade strategies. Let's go over those. The short side has been difficult because of what I'm talking about, and here are the NASDAQ strategies on the day. Cobra 3 got short, market started to roll over here, and then floated higher, and then EVP1 got short here, and the market started to roll over, floated higher. Same thing here, tick pulse and tick count trend minus 50 on the day. Tick reversal, same thing, down on the day. Hard to short this market, minus 1605. When I say short, these are day trade shorts, and so over the years, when you have a bull market, you can take short trades on certain days. When you have a bear market, you can take long trades on certain days if they're very short-term day trade algos. But in this bull market, it's one of the toughest markets to short, even in a very, very short time frame. There's opportunities, from here to here, but for a multi-hour short, it's kind of difficult to do that intraday. There's lots of liquidity that continues to come in and buy this market. So tick long aggressive was up just a little bit on the day, I think $200 or $300, and momentum reversal captured the trade. One of the top strategies lately is this momentum reversal is capturing this market that continues to S&P strategies. We have tick pulse once again. This one shorted on the NASDAQ, shorted on the S&P. Market reverses, kind of creates a V reversal. Prop up pattern, not allowed to go down type of a market. Tick count trend dynamic turnaround, or dynamic tick pullback. Got long, small profit there. Gap continuation in reverse. Tried to short a shallow rally, and it was down on the day. So overall, the last 2 days were minus 6.8K, and we are waiting for a drawdown alert. It could happen intraday. If it happens intraday, I will get in intraday, and then I will send out an email, and by the time I get in and by the time the email goes out, there could be some differences from where I get in, but we're just looking for that opportunity. Once again, Jobs Friday is tomorrow. That report comes out at 7:30. That creates some volatility or could create some trends in the market. Looking forward to the last trading day of the week on this holiday shortened week tomorrow. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.